Hello, everybody. Happy Friday. I hope everyone had a lovely week. I see lots of faces already in the chat that everyone is here ready to learn on a lovely Friday afternoon. So I won't keep you too long. We can get straight to the action. But as is tradition here, I do want to say hello to everybody that we have with us here today. So hello, Raul. Good to see you. Iris, Jela, Francia, Consuelo, Delia, Asby, Eddie, Juan, Elena, Wendy, Elizabeth, Gloria, Andrew, Eva, Lily, Fernando, Fidelia, Jose, Nancy, and Kike. Thank you guys all so much for being here. It's great to see you all. So I'm going to get started. Before I say what the topic for today's webinar is that we had a crazy week in the market. We've had a crazy couple of weeks in the market. Last Friday's webinar was a recap. We talked about what happened in 2020 and how we kind of ended on a little bit of a calm note. December ended with little relative movement between sectors. However, 2021 got started with a bang in the market. There has been lots of changes across the board, lots of events leading up to the US inauguration, which we're not here to talk about politics, we're here to talk about stocks, but we do feel the results of politics in our economy. And I'm not going to go into it in detail, but what I'm going to do today is instead of telling you what I see going on with the market, I'm going to show you some different tools and indices, which is the topic of today's webinar, so that you can learn to not take my word for it. You can learn how to figure out what's going on in the market for yourself and to make what you find pertinent and valuable to how and where you want to invest. So the topic of today's webinar, again, is going to be indices. We've covered indices and exchanges before, but I'm going to go in a lot more detail today, looking at what the major indices are. So we're going to start with the big bubble, and then we're going to take a little bit out. Then we're going to take a smaller bit, and we're going to try and see how narrow we can get while still having what we find be valuable and usable information. Without any further ado, let us get to it. Hello, Magnolia and Maida. Thank you again for your email, Maida. I responded. Cleo is being crazy somewhere else. You'll probably see her jump up over here at some point through the webinar. But let us get started with today's topic, which is going to be looking at and comparing market indices. Raul, thank you so much for joining. It's a pleasure to have you here. I will do a lot of talking through today's presentation, but if you have any questions or anything, I do have the chat up on my second monitor over here. So I am reading chat, and I am more than happy to help answer any questions you have, or if there's anything you want more detail about or explanations about. Let me know. I'm here to help. So let's talk market indices. Well, before we can talk what an index is, let's talk what an exchange is, because an exchange is a good first step when looking at different markets. So just a quick bit of review for many of you. A stock exchange is a place that stocks can be bought and sold. So there are physical exchanges, which is a place that you go there and you can go and stand out on the floor and say, selling shares of Microsoft, and there will be people that will buy it. Well, not like that. I mean, the people that work there 9 to 5 may look at you like you're little, but you can actually go to the stock exchange. That is a real place, and stocks are bought and sold at that exchange. Now, before the internet, exchanges were the place that stocks were bought and sold. So what will happen is you will go there, and instead of Juan de los Palotes or Jonathan Stav going down to try and sell their shares or buy their shares, instead, I would call up somebody on the phone. Their name is a broker. And that broker will represent me and go out onto the floor of the exchange to try and buy or sell whatever it is that I'm looking to buy or sell. And then I will have my broker. Then there will also be the seller's broker. And the two of them will sit there and scream back and forth at each other to try and agree on a price. And that is how stock trades worked. It was brokers representing buyers and sellers would meet up on the floor and try and negotiate or come up with the price that they want to buy and sell at. Now, this is how things have been done for hundreds of years. But with the rise of the internet, a lot of this trading is happening online. Not just the actual me wanting to order stocks. I don't need to call up my broker on the phone. All I have to do now, is there an incorrect date? There is an incorrect date. Thank you for that. So now, instead of needing to call up my broker on the phone, all I need to do is go online to Fidelity, Robinhood, whatever broker you use, and you can put in an order online. And then you will be matched with a seller, or you will buy or sell directly to a broker, depending on the specific exchange. Now, different exchanges will buy and sell different securities. So for example, if I wanted to buy shares of Google, I would need to go to a particular exchange. Again, technology has made this easy. You don't need to think about what exchange you want to go to. All of that is done automatically by the computers and by the powers that be. But back in the day, and technically still, different exchanges will trade different securities. And that will become important in one moment here. So let's look at why. And this is just a technicality, but it is worth mentioning. Companies can be listed on multiple exchanges. It is rare, but it mostly happens where a company is listed in the US market as well as a foreign market. For companies such as Alibaba that have a ticker symbol that is bought and sold in the US, they still are part of the Chinese market. So now, this presentation is not about exchanges. It's about indices. So what is an index and how does it compare to an exchange? Now, unlike exchanges, indexes, they're not markets. They're not marketplaces. You don't go to an index to buy or sell. Instead, indexes are a way of measuring or a way of seeing how a market or an exchange is doing, so that we can compare that market from how it's doing today to how it was doing last week, last month, last year, so on and so forth. So it gives us one number that we can look at and say, the Dow Jones, or I'll use a better term, the New York Stock Exchange is doing good today. What does good mean? I don't want words, I want numbers. So we give it a number. And we can then look at that number and say that number is going up over time or that number is going down over time. So indexes differ, though, on how they weigh companies. And this is important, and I'll go into a couple of examples of each. But the most widely used, the most common one, is what's called market cap or market capitalization. Big fancy words for the more a company is worth, the more impact they have. The bigger the hippo, the bigger the splash. That is how most indexes that we will look at today and most indexes that are commonly used works. Because if the market is worth $100, not every company is worth $1. Some companies may be worth $5 or $10 or $20. So that matters because that company, if the price of that company goes up, they they count for a lot more of the market than the tiny little guy that's over in the corner. Similar to market capitalization weighted, we have what's called price weighted. Price weighted, instead of it being based on how much the company is worth, it's based on the price of a share. So it's based on what is the share price of whatever we're looking at. Now, this may seem very similar to market cap because worth we think of as price. But what happens with this? What happens if, for example, Tesla has a stock split? They bring down the price of their share, but give you more shares. Market capitalization, nothing would change. The value of the company is still the same. All we've done is changed how many stocks there are, or how many shares there are, and how much those shares are worth. But for price weighted, that would make a world of difference because that stock is now worth a lot less than it was yesterday. Not because the company suddenly deflated, but literally because they changed the price of the stock. So price weighted is not as common, but we will go over one common index that uses price weighted. So I do want to mention it. And then the last one that we will also go into some examples of today is equal weighted. Equal weighted is, think of it like the Senate, the US Senate. Every state, doesn't matter if you're California or Wyoming, every state has 2 votes. Equal weighted is the exact same thing. Walmart has the exact same amount of votes as Bed Bath & Beyond. They are wildly different companies where Walmart has over 1,000 times more revenue than Bed Bath & Beyond. But because it is equal weighted, they both count the exact same amount. One company, one vote. Now, these are 3 of the most common ways this is done. Hello, Yami, and hello, Mavel. Good to see you both. And Filberto. These are the 3 most common ways this is done. But there are more, but we're not going to go into those today. Because I don't want to tell you and bore you about all of these crazy terms. I want to tell you why it matters. Why are indexes important? Something I've already said is that indexes will give us a single number that we can then look at and track the performance of a market over time. Now, indexes help us to understand not just when, but where in the market changes occur. Because indexes come in many shapes and sizes. Funny saying. I apologize for the weird examples, but it's true. Indexes can be big things or they can be very small. All an index means is that it tracks something that a bunch of companies or more than one company has in common. So indexes can represent broad markets such as the New York Stock Exchange or targeted markets such as industries. For example, we could have the S&P 500, and we'll go over what that is in a minute if you're not familiar, but 500 of the largest companies in the US market. Within that, we can then look at energy, and we can look at the energy companies in the S&P 500. But then we can go even smaller than that, where we can then look at clean energy companies in the energy sector. Maybe not in the S&P 500, that wouldn't give us many choices, if any. But you can look at a very targeted industry if you want. Because a lot of what you can find and there's investment opportunities in these industries, can be found by what I like to call following the breadcrumbs. If anyone ever read Hansel and Gretel, it's a story about two children that followed the breadcrumbs. They had a little trail that went all up and around, and they followed it by picking up these little pieces along the way. So we can do that with indexes. We can start by looking at the entire market, and over time and by asking questions, we can go closer and closer and closer to finding where the real story is, or where the real opportunity is. So that's what I want to show you today. I want to show you, we're going to start big. We're going to start with the big boys and girls, and then we're going to get smaller, and eventually I'm going to show you where the trail of breadcrumbs ends, and it's up to you to go and find where your trail of breadcrumbs ends up. So let's start with the major market indexes. These are indexes, single number, that represents entire exchanges, hundreds, if not thousands, of stocks worth billions, if not trillions, of dollars. That is the scale we're talking about here. Trillions of dollars summarized in one number. So, these indexes cover exchanges as well as major markets in the US equity market, the stock world, we'll say. Now, we'll go over a few of the key ones, as well as give you some examples of key companies that are in those indexes or are worth the most in those indexes, depending on the situation, and what those indexes can tell us about the market as a whole, or how they apply to the market. So the major indexes that we're about to look at are the Nasdaq exchange, which is represented by the Nasdaq Composite Index, the Standard & Poor's 500, the New York Stock Exchange, and the Dow Jones Industrial Average, or DJIA. Now, before we go any further, I want to be able to put all of this back in why does it matter to you, and how could you use all of this information. And through many of these webinars, we've talked about and used the website StockCharts. Because indexes are not publicly available tickers, they're not companies you can go out and buy and sell, not all websites will use the same lookup or the same letters for each index. So the ticker symbols and the symbols that I will be giving you all today are for StockCharts specifically. They may be different if you go to Finance Yahoo or if you go elsewhere. So keep that in mind, that what we're going to be going over, the symbols we're going over, are for StockCharts specifically. If you're curious what it might be for a different website, you can always just search the name Nasdaq Composite Index into the search bar of whatever charting website you use and see what comes up. It may be different, it may be the same, but again, today we're just going to be focusing on StockCharts. So, without any further ado, let's talk about some major markets. The first one I want to look at is one that in today's market is especially today's market, was very important to look at. There was a lot of action that happened, and a lot of that action happened in the Nasdaq Composite Index. Hey, Blaze, good to see you. And the StockCharts ticker symbol for the Nasdaq is COMPQ, COMPQ. Now, the Nasdaq Composite Index is made up of over 2,500 different companies. Now, it is most of the companies in the Nasdaq with some exclusions. They don't include financial companies, and they don't include ETFs, exchanges, or options. And to use some of the terms that we learned earlier, fancy words, we have a market capitalization weighted index. So the more a company is worth, the more oomph or the more value it's going to have in that number. And the Nasdaq, because of some of the companies, some of the largest companies that it has are technology-based companies, it is heavily weighted towards and by technology companies. So a lot of what the Nasdaq will tell us is how big tech is doing. Now, the reason for that is let's look at some of the largest companies in the Nasdaq. Apple, Microsoft, Amazon, Google, Tesla, and Facebook. These are the 6 biggest companies in the Nasdaq exchange, and by and large, the 6 biggest companies in the Nasdaq Composite Index. So there's where your technology weighted comes from. You've got 6 titans of industry in one single number. So of course, they're going to have a little bit more say over how the Nasdaq is doing. But the Nasdaq is 2,500 companies. That's a big index. What if we made it smaller? And not just a little bit smaller, let's make it a lot smaller. How about 100? That's what the Nasdaq 100 is. The Nasdaq 100, ticker symbol on StockCharts, $, all of our indexes will have a $sign at the front. That's how we know it's an index, not a stock. $NDX is the 100 largest market cap companies in the Nasdaq. Again, you're going to see this term market cap or market capitalization throughout this presentation and throughout your investing career. So market cap means bigger companies, more value. And these are the largest companies in the Nasdaq. There's not really much else to say. So it's going to be the same 6 that we saw before. Apple, Microsoft, Amazon, Google, Tesla, Facebook. And that's only the start. But those 6 right there make up over 30% of the value of the Nasdaq 100. Now, one thing I didn't mention, and is worth mentioning, is the Nasdaq is an exchange. The Nasdaq Stock Exchange is a real exchange. So, Lucia, that is a great point. The ETFs have the $sign as well because they track indexes. They'll all be tracking their underlying index, such as the technology index or the energy index. So they are all index funds, which is why they still have that $sign. But yes, that is a great example. So we've talked right now about the Nasdaq, and the Nasdaq is a stock exchange. It's not a place like the New York Stock Exchange down on Wall Street, but it is a place that buyers go to buy and sellers go to sell shares of companies. So all of these companies are limited to the companies or to the listings in the Nasdaq exchange. Now, there is a second exchange, the New York Stock Exchange. And between the Nasdaq and the New York Stock Exchange, that is where the vast majority of US trade happens. And we don't want to know just how the New York Stock Exchange is doing or how just the Nasdaq is doing. Let's put them all together, and that is where we get the Standard & Poor's 500, or as many of you have heard before, the S&P 500. Now, the StockCharts ticker symbol for this is $SPX. $SPX is going to be the ticker symbol for StockCharts. And yes, Vicky, Netflix, ticker symbol NFLX is in the Nasdaq. That is a Nasdaq company. So within the S&P 500, Standard & Poor's 500, that number is important. 500 refers to the number of companies in the index. It's a trend you'll see throughout this presentation, and most indices will follow that. So it tracks, as I just said, 500 of the largest, not the largest, but of the largest market cap companies in the US market. Now, the reason I said of the largest is important. This is not, if you are one of the top 500, congratulations, you're in the S&P. There is actually a committee of only 12 people. There are 12 people that sit at the head of the table and decide what companies make it onto the S&P 500. Now, there are requirements, there are things that you need to have in order to make it to the S&P 500, but just because you have those things doesn't mean you're getting into the club. They still get to say if you get to be a part of the S&P or not. And just like the Nasdaq, the S&P 500 is also heavily weighted by technology companies. And to save us a little bit of time, I'm going to just smush the 6 companies that we've talked about before into the same 6 companies as we talked about for the Nasdaq, because they're still the 6 largest companies in the US market. But alongside them, we have some other additions that I wanted to mention. Berkshire Hathaway, Johnson & Johnson, JP Morgan Chase. These are 3 other very, very, very large companies within the S&P 500 index. So the S&P is our catch-all. It is the thing that sits up at the top of the 500 biggest companies in the US market. And it is a great benchmark of that. It tells us how is big business doing. But let's go back over to the other side now. And we've talked about the Nasdaq Composite Index, which makes up all of the companies in the Nasdaq. The New York Stock Exchange also has an index. And that index ticker symbol on StockCharts is $NYA. Just like the Nasdaq, this one is market capitalization weighted and is made up by over 2,000 companies that are listed on the New York Stock Exchange. And unlike the Nasdaq Composite Index, which doesn't allow for financial companies, finance companies are included within the New York Stock Exchange Index. Some of the largest companies in this index are Alibaba, Berkshire Hathaway, Johnson & Johnson, JP Morgan Chase. Here's our finance companies, JP Morgan Chase, Visa, and retail giant Walmart. Consuelo is asking, what about Tesla that came to be part of the S&P 500? That is correct. Tesla got added to the S&P 500. Was at the beginning of this year. So they were approved last year, and then this year they actually joined the S&P 500. I can't remember whose spot they took, though. Maybe somebody in chat, if you know, help me out. And while you're commenting on the chat, don't forget to leave this video a like or subscribe to our YouTube channel so that you automatically get notified when our next webinars are happening. But they're always Friday, 4 p.m. Pacific. So let's now talk about the last of the big 4. The Dow Jones Industrial Average, the DJIA. If you asked somebody that knows nothing about the stock market, hey, how is the market doing today? This is probably the number that they're going to tell you. This is what they're going to look at. They replaced Apartment Investment Company. Thank you, Nate, and hello. Good to see you. Nate is on a well-earned vacation right now, but his vacation entails hanging out here with us all still. So the StockCharts ticker symbol for the Dow Jones is $INDU. And we've talked a lot about capitalization weighted indices. This is our price weighted index. Keep that in mind. Price weighted index, not market capitalization. And because of that, it is one of the reasons that a lot of investors, savvy investors, like to avoid following, or not following, but like to avoid using the Dow Jones as a benchmark. Because it is price weighted, investors tend to prefer market capitalization weighted indices or equal weighted indices, depending on the use. But it is one that you're going to see the name of very, very frequently, so I do want to mention it. And I want to mention what it is. The Dow Jones is a list of 30 of the largest companies within the US market. Just like the S&P 500, it is decided upon by a committee. There's a group of people that tell us, hey, the Dow Jones are these companies. And some of the largest companies within the Dow Jones are United Health, Home Depot, Salesforce, Amgen, Microsoft, and Mickey D's. So we've talked a lot now about the different large market-wide indexes that we have. Let's start to get a little bit smaller. Let's now look at, we've looked at the largest companies in the S&P, in the market by looking at the S&P or by looking at the Nasdaq to see how that exchange is doing and the New York Stock Exchange to see how that exchange is doing. But what about the little guys? What about the guys that aren't little, aren't the 30 largest, but are somewhere in the middle? Because those companies matter too. That's where we have size-specific indexes. So we just talked a little bit about the S&P 500. Let's now look at let's break that down again. Standard & Poor's 500 large cap index. So there are other exchanges that fall within this same umbrella of Standard & Poor's. It is still decided by the committee of 12 people, but let's go take a look at the S&P 500's little brothers. These are going to be the S&P 400, which is mid-cap companies or middle capitalization companies, and then the S&P 600, which is 600 small capitalization indexes. And then we'll also take a look a little bit more after that. So let's talk about mid-cap, the S&P 400. On StockCharts, the ticker symbol we have for that one is $MID, mid. Go figure, mid-cap. And this is 400 chosen companies. These are not random. These are chosen because they are supposed to represent a good spread of the market. So think about it like this. I love cake, but my favorite kind of cake is ice cream cake, where when you cut inside of it, you have the icing on the top, you have a big layer of cake in the middle, maybe some more icing, and then you get this beautiful cross-section of all of the different things that are inside of the cake. That is what this index is supposed to be. It's supposed to be a beautiful cut down the middle of the cake of what mid-sized companies look like in the US market and how those mid-sized companies are doing in the market. So we can get a nice big cut. We have cake. We have different amounts that these companies are worth. And this is not excuse me, this is not a rule. This doesn't mean that just because it's under this amount or over this amount, that is what decides it. No. This is just, of the 400 companies right now, the smallest company in the mid-cap index is worth $3.2 billion, and the largest company in the mid-cap index is worth $9.8 billion. But that does change and is subject to change whenever they decide to add or remove companies from that listing. And again, this is market cap weighted index. And I'll just go through a couple of the flavors of icing that we have inside of this cake, some of the key companies that we have within the S&P 400 that you may be familiar with. Apparel company American Eagle, Dick's Sporting Goods, tire and rubber company Goodyear, Grubhub, and H&R Block. All of these companies are mid-capitalization companies and are members of the current S&P 400 mid-cap index. Let's get a little bit smaller. Let's now look at the S&P 600, the Standard & Poor's 600 small cap index. The ticker symbol for this is small, $SML. And it tracks 600 selected companies in the US market. It's another cake. We're supposed to take a nice cut out of the side of the cake to have a good look at all of the goodness that's inside of it. So, in our cake, we have companies that are on the small end, worth $600 million. Small company, I know. And on the largest, we have $2.4 billion. Once again, it is market capitalization weighted. And some key companies that you may be familiar with is the semiconductor company Arrow Electronics, Bed Bath & Beyond, so the Sotheby's, which is a auction company, BJ's Restaurants, and our favorite Roomba manufacturer, iRobot Corporation. Completely unrelated to the movie. So, these are companies that fall within the S&P 600 small cap index. Now, before we go beyond these main markets and these larger indices, I want to talk about, we talked about the Nasdaq 100. I do want to mention the S&P 100. It's not as commonly looked at, but it is still important, and I'll show you why in one moment. For this one, the StockCharts ticker symbol is $OEX. And it, surprise, surprise, tracks 100 selected companies from the S&P 500. It's market capitalization weighted, but the reason why it's important is this. I talked a little bit about how the big companies get a little bit more of a say. But when we're looking at something like the largest companies in the US market, we kind of lose a sense for how big these companies really are. There's something common in just society, something common that we see in everyday life called the long tail effect. What that means is the most stuff going on, the most money belongs to a small group, and then it gets bigger and bigger and bigger, where the 90% of what's down here may be only 10% of the value. That's what's called the long tail effect. The same thing happens in stocks, where the S&P 500 is the 500 largest companies in the U.S. exchange, 500 of the largest companies in the U.S. exchanges. But the S&P 100, so 100 of those 500, is 63% of the value of the entire S&P 500. So almost 2/3 of the value of the S&P 500 is in the 100 largest companies alone. Now, what about the rest of the market? I just talked about this long tail effect. Well, the S&P 100 is also more than half, just barely more than half of the entire US equity market. So these 100 companies, while it is a small list, is over half of the value of the US equity market, which is absolutely nuts to think about. So the S&P 100 isn't as commonly used, but it is very interesting to look at because it shows us how a small group of companies owns or more than half of the value of the US market. But let's not just stop here. Let's look at some other valuable indexes to track. And this is where we might get into a little bit of review for some of you, but is still valuable information. Let's start with one that you will hear a lot about if you read our newsletters, which comes to your inbox every Monday, this Tuesday, but mostly every Monday. Next week will be Tuesday, though, because Monday is Martin Luther King Jr. Day in the United States. So, volatility in the market, we are going to look at the ticker symbol VIX, V-I-X. And it is the volatility index that is calculated or figured out by using options from the Chicago Board Options Exchange, CBOE. And volatility gives us a number to try and say how fast are prices in the market changing. Now, I covered this a little bit 2 classes ago, but it's worth mentioning here again. Volatility is not something directional. It doesn't care if the market is going up or it doesn't care that the market is going down. All it cares about is that it's moving and how quickly is it moving. So it looks at the spread of prices, how different the prices are, how fast they're changing, not the direction. But here's another index that when I say what it means, what the letters stand for, it'll make a little bit more sense why it's an index. BPI, or Bullish Percent Index. Go figure. Bullish Percent Index is an index as well. But unlike all of the other ones that we've talked about today, where the bigger companies get a bigger say, whether it be market or price weighted, Bullish Percent is an equal weighted index. Ta-da! Everything's full circle. We've now used all of the examples from before. But Bullish Percent is equal weighted, which means that Google is worth the exact same as Netflix, as is Zoom. And what this will give us is a way of knowing how many companies in that market are on a buy signal. We've talked a lot about point and figure charts. We want to look here at point and figure charts to figure out are stocks on a buy signal or are stocks on a sell signal. So StockCharts provides us some bullish percent numbers. StockCharts gives us bullish percents for the S&P 500 sectors. So it will look at the energy sector in the S&P 500, take all of those companies and give you a percent. 60% of the companies are on a buy signal, it'll say, or 40% are on a buy signal, and then charts that over time. So we know, are more companies going on buy signals, or are more companies going on sell signals? And StockCharts doesn't just stop there. They also provide bullish percents for a number of different indexes that we've covered today, such as the Nasdaq 100, the S&P 100, the Dow Jones, or sorry, not the Dow Jones, the New York Stock Exchange, as well as this S&P 500. And sectors made simple. Us, right here. We also give you bullish percents, but we try and give you information that StockCharts doesn't. So what we do is all of the bullish percents that you'll find on the matrix are the bullish percents for the entire New York Stock Exchange. Not just the companies in the S&P 500. We look at the entire New York Stock Exchange every day to find how many companies in each sector are on a buy signal and are on a sell signal. Because sometimes opportunities in sectors emerge outside of the S&P 500. And I want to show you that a little bit more, and I want to give you some more tools on how to find exactly that. Opportunities outside of the S&P 500, but within sectors or indexes that are tracked. That is the whole goal of today's presentation. Now, before we go any further, I do want to say this. You cannot buy an index. Indexes are not tradable. But you can buy an ETF. And ETFs, well, certain ETFs, more specifically, ETFs that are called index funds, they are tradable. They are equities that you can go out and buy into, that then there is a managed portfolio or a passively managed portfolio, but there is a portfolio that is held that is supposed to follow the performance of that market. So they will track an index, and as that index improves, the value of that portfolio will change. So, as I said, indexes cannot be bought or sold, but many ETFs do track specific indices. I'm going to go through a couple of examples right now. The S&P 500, there is SPY, VOO, and IVV, belonging to different groups. There are different companies that manage these portfolios. SPY is managed by the Spider Investment Group, State Street Spider, from my alma mater city of Boston. Then there is VOO, managed by Vanguard. And lastly, IVV, managed by iShares. So there are oftentimes multiple options that trade the same index. Then for the Dow Jones, we have DIA. For the Nasdaq, there's not many ETFs, if any major ETFs, that trade the Nasdaq Composite Index. Instead, they prefer to go for the Nasdaq 100, which is why I wanted to share that with you earlier. The Nasdaq 100 does have a very popular and common ETF that follows and tracks that index, QQQ. And you can even go out and find volatility funds. These are funds that trade the volatility index, tracking the VIX over time. These include XVZ, VXZ, and VIXM. And if you're interested to learn more about these ETFs in specific, but any ETFs that follow different funds, I recommend you take a look at etfdb.com. As well as members, we have a webinar all about exchanges and indices already up on Sectors Made Simple's website. That immediately after you finish this, if you haven't heard my voice enough today, you can go back and watch and see more ETFs that are available in different markets, as well as ways of comparing different ETFs that trade the same or similar indices. Now, I've just talked about how you can take an index that you already know of and trade that index. But the opposite is also true. Jacqueline, I don't know where my mom is.
She's here. She just can't type right now.
She can't type right now?
She's in the car listening.
Ah, okay. So she is here. She is here with us. Hi, Mom. Good to see you. Or good to feel your presence with us. So, everything I've covered so far is talking about indices and then finding ETFs that track those indices. Let's flip that backwards really quickly, because we can also do that. We can also use ETFs to track indices. And this is where I'm going to leave you all with this today. Tracking indexes requires oversight or selection of companies. We've seen this in a lot of the ETFs, in the indexes that we've looked at today. It is either specific criteria, or there are people, a group or a committee of people that choose the companies in that index. So this is not something that just appears out of thin air. This is something that is managed and decided upon. So tracking indexes does require somebody or something to be deciding who makes the cut and who doesn't. How much is each company worth? Now, ETFs, while by no means are they a perfect predictor or indicator of sector or of the performance of the underlying group, they can be used to track index performance. So where we go to StockCharts and we find, for example, XLV, the healthcare S&P 500 sector ETF. We can also go and we can find biotech, and we can go find an ETF that trades biotech companies and follow the performance of that ETF to see how the biotech sector may be doing. Now, there are two big notes that I want to make when I'm talking about this, because this is very important. When you are using ETFs to look at the performance of a market, knowing what index they track is very important. And not just the index, the specific index. For example, XLE, let's say, the energy S&P 500 ETF. This is an ETF that tracks the performance of energy companies within the S&P 500. Not just only the S&P 500. So if you want to get exposure beyond that, you might need to look at the New York Stock Exchange energy sector and then see if there's ETFs that track that sector. And then the other thing, and when you're dealing with big indexes, the reason that they're valuable is because they have a lot of companies. No one company is worth 25% of the entire value of that index. But when we start cutting the slices of the cake smaller and smaller and smaller, darn, I'm really obsessed with cake. Kira, can we get some ice cream cake? It's been a while.
How about I just make one?
Ooh. Ice cream cake is in order. My birthday is close enough, right?
No, it's not.
My birthday's only 10 months away. I want an ice cream cake, all right? Anyway,
You don't have a birthday excuse to have
XLE is the energy ETF in the S&P 500. But even there, in what you would think would be a pretty large group, two companies make up almost 45% of the portfolio. Exxon is 23.8%, and Chevron is 21.4%. So when one company like Exxon has a bad day, like it did today, the entire sector will feel the results of that, because 1/4 of the weight in that sector is this one company. So keep that in mind. Keep in mind what index you're looking at. And not just that, but look at how many companies are in that index and the weight each company has on that index. Now, before we end, I do want to go and I do want to look here at StockCharts together, where I can show you how you can get started with all of this information that we've shared today, and how you can use that information to start finding your story. So, here on StockCharts, we'll start on the home page. We will go here to Charts and Tools, scroll down to Candle Glance, and then we can choose a predefined chart under predefined groups. Let's click first on major US indexes. We're going to change the period. We don't want to have our candlesticks. We want to have our X's and O's. These now are the major indexes. Some of these are going to be the ones that we've talked about before. Here's the Dow Jones. Here's the S&P 500. Here's the Nasdaq. And then it goes into smaller specific indexes. Now, here we see the major indexes. So you may see here, Comp Q got hit pretty hard. It had a reversal of 5 boxes today. So that may be where you start your search. You see that that happened. Then you may want to go and look at the Nasdaq 100 and see what happens. Now, let's go look at another one. Let's look here at S&P sector ETFs. Same thing. We'll set it to PNF. And here we have, it puts in $SPX. I prefer to use SPY because it is the S&P 500 ETF from the State Street Spider Group. So here we have all of the sectors that we look at for Sectors Made Simple. They are all tradable ETFs on the US exchange, and this puts them all in one place for you to look at. Then, if we go back to the exact same place, Charts and Tools, Candle Glance, and we scroll down, you have both major bullish percent indexes, which will give you the BPI, the bullish percent index, the percent of companies on a buy signal in each market, where here we have the New York Stock Exchange, here we have the Nasdaq, so on and so forth. If you're ever curious what one of these are in particular, you can click on the chart, and then right up here, it will tell you what it actually is. So this would be the Nasdaq Composite Bullish Percent Index. And then the last one is our sector Bullish Percent Indexes that we have right here. Sorry, there is one more I do want to share, which is going to be, where is it? Someone was asking before about where you can find the industry groups. You can find the industry groups down below. However, these are not going to give you an ETF. These are going to give you companies in those specific sectors, or in those specific industries in this case. So these would give you biotech companies. It would give you coal companies. To actually find ETFs that trade those indexes, you're going to want to use a website like ETF.com or ETFDB.com to find particular ETFs that trade those indexes. Now, the last one that I wanted to share is S&P market capitalization. There's only 3 things, but it is a great way of seeing the exact same 3 things that we've talked about earlier. The big brother, the little brother, and the one stuck in the middle. the S&P 500 large cap, the S&P 400 mid cap, and the S&P 600 small cap. And this is the beginning. Here we can see, well, large cap did fine, small cap did fine, mid took a large hit today. Let's go explore why. And you can start your search here by looking at these different charts, picking and choosing the charts that you want to see, and you can always add or remove charts right here. So now I have the Nasdaq Composite. So you can start to find the story and not just find what the news says is doing well or is doing poorly. You can find for yourself what industries, what markets, what market capitalization classes are doing well right now, where the opportunities may be, and where the opportunities make the most sense for you. That is all I have for you all today. I hope everybody learned something new and had some fun along the way with all of my crazy little voices and weird examples. It's an absolute pleasure to get to share information with you all. Again, if you enjoyed this webinar, please give it a like. YouTube does like the likes. They like their whole little system. Yay, algorithm. And also hit subscribe. It will help you to support us, as well as it will give you notifications when our webinar goes live next week. But the webinar is always at 4 p.m. Pacific on Fridays. Members, your webinars are always going to be on Tuesdays at 4 p.m. Pacific as well. Thank you all again for joining us today. It was an absolute pleasure, and I will catch all of the members on Tuesday and everybody else here ready to learn something new next Friday. Thank you all so much. Enjoy, have a safe and lovely weekend, and we will see you all very, very soon. Bye.